Hi, today is Monday the 17th, and I thought since it's a public holiday I would record my videos on time for a change. So we start with the SPX 500 on the 4-hour chart. On this one you can see the market has been quite volatile, but I mean still within, I would say, normal ranges considering the volatility. If you remember, this was here mid-December. First that reaction to FOMC and then down and then a crazy recovery. I think the market is looking for an equilibrium, and the equilibrium is probably around pivot here at 46.85. We see that the market broke it. It's not going very much down. I mean, this is not a very strong support here, 46.05. The strong support is back to the December lows, 45.35. At the moment the market is still hesitant, and it will remain so, because we have earnings coming. Last week we had JPM showing on the financial sector not doing too well. I mean, their earnings were not so bad, but it shows a change of tone, a change of interpretation. Now we know that we're going from QE to normalization and probably QT later this year, rate hikes and everything. So the market is probably looking at whether earnings can keep the bullish momentum going or not. So I think the next few weeks will be quite eventful. So on this 4-hour chart, I plotted here a fib expansion pattern, and we have here, I mean, another one here actually on a smaller, I think this comes from the 1-hour chart. And we had a number of targets, and this one was hit on Friday actually, almost spot on. And then on Friday, despite negative economic news, the market recovered and still not going back to pivots. So as I said, market could be range trading tomorrow. Well, tomorrow we also have the VIX January future expiring, so there may be still some chaotic movements coming. So on this one, range trading volatility is high, although not that high. As a matter of fact, if we look at VIX hit that target here, 22, as I mentioned on Slack on my daily notes, and now it's going back to this pivot level. If this pivot level breaks again, the VIX may actually go down, and we'll have definitely the market going back into bullish mode. We have a very good anti-correlation, so at the moment VIX and SPX really work hand in hand. So let's go back to SPX. I won't bother looking at a daily chart, it's even more confusing. So for tomorrow on the 1-hour chart, the levels are about the same. We see same pivot level here, same strong support. I would assume the market will keep drifting down, probably above 46.15 again. And here we see that other expansion line, which showed exactly the target it hit on Friday 1 p.m. This is the second target here on the same pattern, and we've got lower ones here. If I look at these patterns in the 4-hour chart, I do have this one, 45. Yeah, I think there will be a barrage of support levels here if the market goes south. But at the moment, there's not much excitement. It's just that the Nasdaq has been bumping on pivot and going a little bit down. Ticks were no longer the flavor of the week last week. At the same time, the buying interest in these tech stocks is still pretty strong, and nothing will happen until earnings. We have Netflix later this week, which could be some front runner, but I mean, Netflix doesn't really matter. It's going to be really the big ones, probably around the 30th to 2nd, 3rd of February. So if we look at FANG, actually, FANG shows, well, those lines have shifted down, so there could be further drifting. We can maybe ignore the market going up again on Friday, so we could have some drifting, but at this point it looks like this pivot level is going to hold, so no big sell-off in the cards right now. I'm going to cancel this. As you can see, it went all the way up to the second level, so just to make it simpler. If I look at FANG plus Tesla, it's about the same. It also went to the 50% level, never reached a more significant fib here on 48.25. So I would assume the market is still hesitant around pivot. Sometimes pivot does not give a straight trading range either above or below the line. Sometimes if it's been penetrated several times, it does hover, it does make the market hover within a fairly tight range, which would be about 46.07, let's say 46.10, and then 47.60. Right, so I would say the shift from growth to value is not very clear yet. I also usually look at the QQQ of IWM. It's not the best proxy, but it's okay. Still range trading. Here we had a boost in the shift from growth to value early Jan, bounced back, and here it's still probably going to range above 175 quite some time. Since rates have been more the talk of the day recently with the Fed, I checked this 2-year, 10-year spread, and the yields also, this is aiming down, but really we haven't broken 0.78, and we're still not looking at a recession picture, which to me would be better if the Fed acts quickly, because if they still hike rates and go into tightening where the growth, the US economy goes sharply down, it could be quite negative for the markets, and it would be an indication of recession. News from China are not great. The growth is really abating a lot. So will the US be immune from that? It's difficult to say, but probably not. So I would anticipate that over the long run, this spread, credit spread, not credit spread in terms of options, but in terms of treasuries, will probably go further down. And that will have eventually an impact on stocks. So I would say 2022 could be a range trading to bearish year, but of course it's too early to say. So that is it for now. I will now record the video on options position. Thank you for watching, and bye for now.